So income tax expense may also be included with the expenses, thus eliminating the income before tax line, which means because in interest, the tax is always in percentage, for example, 40%. So for this, you need some kind of amount. And that amount is called income before taxes. So this 3,500 revenue minus all kind of expenses except income tax expense. And then you multiply with the tax rate. So this is the tax. So this 2,900 came from 4,000 minus 600. It's not like, sorry, 3,500 minus 600. So that's why we named this 3,500 as income before taxes, because tax rate, because the income taxes are not in number, not in amount, it's always given in percentage format. So we have some kind of amount. Amount is revenue minus expenses. This is the income before taxes. Then we apply the tax rate, and then we find out the tax expense, and then we less from this income before taxes and tax expense, then we find out the net income. So everybody understand this single step format? Any question? Chandra, Christine, you understand?
Yeah.
And then we have Lisa, Crystal, Jackie, Leo, Stella.
Yes.
I understand it, but I think I have to just review again to grasp.
Okay. Okay, if you have still, questions, you please write us in our WeChat group, and I will be happy to answer over there as well. And also, if somebody asks question in WeChat group, other students are also encouraged to answer that. Okay, in that case, we learn collectively. Okay, now the multi-step format. The multi-step format is, let me just write it down here. A multi-step format is, we have revenue minus cost of goods sold and that is called gross profit or gross margin, and then we less the admin and selling expense, will get operating income. From operating income, we less interest, we get taxable income or income tax, income before taxes, and then we less the tax, we get net income, right? The other name of this operating income is EBIT, which is the abbreviation of earning before interest and taxes. So after that, we less interest and taxes, then we get net earning. Or this name is called earning before taxes, EBT. Right? So let's see that. Here, net revenue. Net revenue means all kind of revenues. How we get the net revenues? All revenue, for example, interest revenue, service revenue, product revenue, all we add it and less return. Any kind of return, right? So that's why we call this net revenue. Net revenue minus the cost of goods sold and then we call this gross profit. Gross margin as well. And for the
Occupancy
gross
cost,
margin. Yes, Chandra.
occupancy cost, is that like warehouse or storage?
This is the income statement of Starbucks.
For cost
Occupancy in
of
that
sales,
case is that how many tables are occupied with the guests.
I mean, for cost of sales, including occupancy cost, is that like a storage?
Yes, the rent cost as well. How much costs
Okay,
are associated to number of customers they are sitting at that time. For example, this
okay,
sold 1,000 coffees, and how many times and how much 1,000 coffees are attributed to the rent you are paying on your furniture and on the space. It's like that.
okay.
Okay. Gross profit is equal to sale minus cost of goods sold. The nickname is COGS, COGS or cost of goods sold, right? We have gross profit. From gross profit, you just less selling and general expenses. So you see, and admin and selling expenses, or all admin expenses are also, depreciation expense, operating expense, storing of operating expense, general administrative expense, and then you find out operating income. Also, under this gross profit, you also write it down all the gains, selling of the long-term assets. If you are replacing your old furniture with the new one, you sell the old furniture, you have some kind of gains. You also write it down here, and also write it down the dividends or interest that you receive from your investments. You have extra cash, you invested into the stock exchange, you receive dividend on those stocks. You also write it down here. So, and then gross margin minus selling and admin expenses, you find out operating income. The name is called EBIT, earning before interest and taxes. It means you still have to deduct the interest and the taxes. So you write it down, the minus interest, and this amount is called earning before taxes, and you apply income tax rate here, and then you less it down, and then this is net income. So there are two format of income statement. One is called single step, and the second is called multi-step format. Right? Any question? No question? So I will be giving you assignment 3. So it will be due on our next class. Next class is on I think on 27, right? 27 of October. And on 27th of October, we will be discussing our midterm, how are we going to conduct it, what kind of like question I'm going to be asking, what are the format. It's like that. If you have any question, please do ask. This is the right time to ask. If no question, then we're going to say the end of the lecture.